start now with Paul. Do you want to sort of introduce yourself and yeah, talk about whatever you want to talk about?
All right. How long do you want me to talk for? Just a couple of minutes?
Yeah, a few minutes, however long you want, really.
Yeah. Okay. So yeah, my background is more entrepreneurial. So I've probably been on at least part of the journey that you're on yourself, and then I made the switch and went to the dark side and joined a kind of angel community, an angel network, which is a bunch of kind of individuals looking for deals to invest in. I ended up running the network for about 3 years, but I found it really interesting because in that time I got a really good understanding of why a lot of entrepreneurs weren't getting funded in terms of investment, and also then I had flashbacks of horrible experiences when I was trying to get investment, and now I knew why I was struggling so much, and then why sometimes I actually see I was successful. So I actually found it very useful because I spoke to probably hundreds and hundreds of entrepreneurs and investors and even VCs and all the people in that kind of community. And in that time, I kind of built up a kind of system and approach that actually works and helps entrepreneurs get funded through raising equity funding. And then I made the switch after that to actually mainly kind of coaching and helping entrepreneurs through that journey through the medium of basically one-to-one coaching, group coaching, webinars and live events when it's possible, and that's where I'm at, and I really thoroughly enjoy it. I've been doing quite a while now, and never stop learning, and that's what I'm here for, to help entrepreneurs basically shortcut what I call the funding game.
Nice, thank you very much. And Amy, do you want to go next?
Sure, yeah. Hi everyone, thanks for having me. Nice to see you all. Yeah, well, my journey is slightly different actually. My very early career was in human resources because I always knew I wanted to work with people, but I've also always been quite creative. I've always written just for kind of pleasure, really, creative writing. And I had this dream that one day I would write a book. But anyway, I kind of, did the sensible thing and had a day job and all the rest of it. And when I was working in HR, I very quickly found a real niche. I loved training, with the training aspect of working within organisations. I worked for a couple of industrial manufacturing businesses down in Somerset where I grew up, and for a charity in Somerset and HR for them. And then I kind of stepped into working with long-term unemployed people in Bridgewater, in Bristol, in Taunton, and as a kind of a coach, really, almost like kind of helping people to discover what they could do instead of being held back by what they thought they couldn't do and by the barriers that they had, if you like. And I really enjoyed doing that work, challenging as it was, because I was dealing with people with multiple issues. And it was very much kind of coming from a background of being the person who does the interviews, to actually helping people to actually prepare to find the work that they were able to do, and then they could kind of learn how to kind of do interviews and all the rest of it. I ran a couple of job clubs and things like that. And then I ended up moving into working for an enterprise agency after a short spell of living abroad and running a small property business in Bulgaria, of all places. Long story, won't go there. And ended up back in Bristol in 2010 when we ran out of money, basically, and ended up working for a small enterprise agency on a pilot project. And it was working with similar people that I've been working with previously in Somerset, but helping people to kind of create a job for themselves, if you like. So my passion has always been around supporting small businesses, entrepreneurs, people who want to do something for themselves. So I tend to work mostly with micro businesses, actually, with like maybe 1 or 2 people, with a lot of pre-starts as well, was my kind of early career. Then that organisation, the pilot project, they ran out of funding in 2015. But in the meantime, I'd also published 3 novels. So in 2015, I wanted to kind of bring my world as a creative writer and a creative entrepreneur, if you like, and my world as a business trainer, business advisor, if you like, together to support small businesses and micro enterprises in particular. And so I kind of specialize in helping people who want to write for themselves. So I kind of, for a little while, I've ended up kind of creating a little bit of a niche for myself as the blog lady. So I don't write for people. It's always, for me, it's always been very much about empowering people to find their own voice and do it for themselves, and to be able to articulate what they're passionate about, be able to tell their story, whether that's through a blog, but I also coach people who are writing a book. So that's my current business, which is, I call it Learn to Love Your Words, because that's effectively what it's all about, is kind of finding your words, finding your voice, finding your passion, and being able to communicate that. But I do still find, because I'm kind of plugged into that startup network, if you like. And as very often with a lot of kind of industries, it's the same sorts of people who kind of roll around all the different companies there. So I've got quite a lot of connections within that sector. And so I find actually that a lot of my kind of bread and butter work is just doing freelance business support for a couple of enterprise agencies, and Brave in particular. I do quite a lot of work for them. If you're aware of Bristol Labour Enterprise, based over in St Paul's. So I do lots of mentoring for them. So I tend to do, actually, majority of my time ends up being doing lots of mentoring for really small businesses, startups. I work, or was working over at Barton Hill Settlement on a Friday morning as part of that project as a sort of self-employment advice service, if you like. But of course, we're just doing it online at the moment. So yeah, so a little bit of a mixed bag, but effectively it's about kind of helping people to kind of make the best of the resources that they have, and the passion that they have, and communicate that to build whatever kind of business they want to build for themselves, if that makes sense.
Fabulous, thank you very much. And Ollie, do you want to go?
Yeah, sure. Thank you very much for having me, first of all, Sarah. Great to hear about Paul's and Amy's experience as well. Lots of kind of crossovers in terms of what you guys are up to as well. So in terms of my background, I'll start at the beginning. I was actually, funnily enough, born in India, where my mum helped set up a fair trade clothing business in the 1980s. It was called Bishopston Trading Company. It had kind of 5 shops in the southwest. My mum was involved in kind of the textile designs, and also speaks fluent Tamil. So I've been back there quite a few times. And I guess my passion for kind of startups and enterprise was, yeah, from a very young age, spending a lot of time on Gloucester Road in their retail shop. So that's kind of a bit of my background. So since kind of graduating from university back in 2009, I've always spent time working in the business startup support arena. So having roles at kind of the Prince's Trust, so some overlap with you there, kind of Amy, and working with similar types of people. Also at the Chamber of Commerce, Business West, most recently up at Oxford Innovation, up at Future Space as well, up at University West of England. And I took the step to start my own startup agency back in 2018. I felt like there was some really good support out there for startups, but particularly in the government funded arena, there was a bit of a disconnect between the advice that was being given and the reality of being a day-to-day founder. So I felt like people were giving advice of a job, and it didn't really resonate with the day-to-day of actually running a business. So yeah, I set up Enterprise Auction in 2018. We work with first-time entrepreneurs to build purpose-driven businesses. We've helped about 170 founders so far start and grow their businesses, raising about 2 million in the process. So we do lots of partnership working. So we work with Virgin Startup. So if founders want to apply as part of the Startup Loans Initiative, we help them along that process. So help with business planning, cash flow forecasting, working on their value proposition. And then we also run a peer learning community called the Engine Room. So yeah, that's about it from me.
Fabulous, thank you very much. So as I said before, if anyone wants to drop some questions, I'd do it in the webinar chat or the Q&A function. But one question that we've got just now, Paul, you mentioned that you saw a lot of what businesses were doing wrong. Could you guys all maybe, what are your sort of top things that you've seen people do that sort of stop them getting the finance and the help that they need to start their business? And maybe just for a bit of positivity, what's the things they're doing right as well, just to flip it?
Okay, well, I guess I'll go first then. So in terms of actually looking for kind of equity capital, so you're looking for capital from some kind of investor to sell shares in your company, then usually the main kind of mistakes, I'll clump it into 3 main mistakes. And then with under each umbrella has got to probably be several hundred, but we'll go with just the top 3. So we've got like, firstly, often when an entrepreneur starts out on the whole journey, because it is a bit of a learning curve, it's a huge learning curve, but it can seem really confusing, really baffling. And so it's really easy to go straight in and start talking to the wrong investor straight off. So first of all, you're trying to find the right investors, trying to find the right person that you need to talk to. A bit like anything, you know, if you're going to the shop and trying to ask someone for information, you've got to find the right person, otherwise you're going to waste a lot of time. Same goes for actually looking for capital. A lot of entrepreneurs waste too much time. For example, they read lots of stories about venture capital firms when they're in the seed stage, so they're going to waste an enormous amount of time talking to venture capital firms, probably sometimes as long as a year or 2 years, in talking to the wrong people. The trouble with obviously VCs is that they tend not to say no. They always say, well, keep in touch, you know, come back when you're ready, or come back when you've got something, and here it is. And then you think you're actually in on those people. Well, I mean, if you're in a seed stage, early stage, then you really should be approaching kind of more family and friends, or kind of friendly investors that you might know, like maybe your Uncle Bob knows an investor, or maybe Uncle Bob himself. So it's the people that love and trust you first might come in the gate, and then it might be that you can leverage some of that into maybe even a reward campaign on Kickstarter, Indiegogo, which is not investment, but it gives validation. And then you can maybe go for equity crowdfunding, which is using all of these people that are now on board, have invested something, and taken that money and then putting it onto an equity crowdfunding campaign, such as Crowdcube, or Seeders, and so you want at least 40% of whatever target you're looking for, and then go on that. So it is possible as an early stage company, even if you're a seed stage or pre-product, or maybe pre-revenue, you're not actually generating any revenue in the moment, then you can still get some traction on that and get some equity finance that way. It just means the amounts will be smaller. So it'll be up to 150,000, for example. And then also you'll get, without going into too much detail, get the tax schemes, SEIS, which is a brilliant scheme for that kind of range. And then you've got the ones where you're up and running already, and you already got some traction, you've got some customers, things are going pretty good. And in this case, you might be looking for more professional angels. You maybe burnt through all your family and friends by that point, or maybe you can go back to them again if that Uncle Bob's still got some money left. And then you can, then go out and get some more professional angels. So you go into angel networks that have these nowadays virtual gatherings where you can get to pitch them for somewhere between 5 and 10 minutes, and then stand a fairly good chance with a decent network of getting some capital on board that way. And or you can go for even some small funds. Maybe these are not the big VCs or big venture capital funds. There are much smaller funds. So there's that, and then equity crowdfunding still plays a part. This time it might be a bigger amount. And then it might be that you're even further down the road, which means that you're high growth, you've been going for 2-3 years, and now you're on a roll. So you really want some big money. You need £1 million plus, and then you go for venture capital firms. That's almost the last stage. And even then I would recommend probably skipping that stage if you can, going back to the professionals, doing another equity crowdfunding round. But that's another story. So that's so it's approaching the right people, and then having the right offer, which means that you basically need to boil down the offer down into 3 parts. One is a 1-page exec summary. That is what you need to approach people like investors, even family and friends sometimes. And then you want a pitch deck, which is like a storyboard of 12 slides that walks people through your proposition and emotionally engage them into buying into what you've got. And then thirdly, some kind of financial model that demonstrates that your business will actually make money at some point. It might not happen straight away, but maybe, who knows, 3 years time, it might start breaking even, making some money, and then you're all heading towards an exit point. So maybe selling the company in 5 to 7 years. That's what you're trying to demonstrate to investors, but that won't come on later on. So you're approaching the right investor, and then with the right offer, 1 pager first, get a conversation going. Then the conversation will be based around the pitch deck, and then after that, the investor will probably want to know a little bit more about your financial model, which you'll give them. So it's getting those things aligned so they actually are really compelling for investors. And a lot of entrepreneurs make the mistake in, for example, wading in with some 100-page business plan and then giving it to the wrong investor, and they don't stand a hope in hell, and they'll be wasting a huge amount of time. Doesn't mean the idea is no good. It just means they haven't got the right investor for them, and also they need the right approach, which is not a 100-page business plan, but it's a 1-page business plan. And that is, but basically the third part is the right approach. So the right approach is like, you don't spray and pray this 1 page all over the place to everyone that you meet, or you find some email list and you spray everyone on that, or you go onto LinkedIn and every day you're bombarding people with this one pager. That's not the way to do it. Obviously, it is to basically curate your own list of your ideal investors, and then find something about the person that you want as an ideal investor, and then come in from that angle. So really do your research on the type of investor that you'd like, and then tell them what you found. I found that you are an ideal investor because of X, Y, and Z. You know this sector, you've done investments in the past, so I think it's a good fit for you. This is what we've done today. Is it of any interest? If it is, would you like to get our one-page exec summary? So you don't spam them with it, you don't give it to them, get them to ask for it, and then you're on the right track. Then you start conversation, things hopefully will go swimmingly after that. So those are the three main things without going on too long. Just to recap, finding the right investor, as good fit investor, coming with the right approach, as the one page of pitch deck and the financial model, so that you got what you need, and some compelling offer there, at the right valuation, ideally, and then the right approach. So do your research and come in, so that you're not just coming in as a random kind of inquiry or cold call. It look like you're really understanding who that person is and why they should invest. And so yeah, those are the mistakes, and also how to overcome them.
Fabulous. Who else wants to jump in on that? Mistakes you've seen businesses make and positive steps they've taken as well.
Yeah, I'm happy to jump in. Oh, go Amy, you've got your hand up.
That's all right. I thought, oh, yeah, whatever. Thanks, Paul. That was really useful, actually. I wrote a few ideas down myself there, actually. So, because I've got some kind of, in my brain at the moment, I'm working on the very early stages of a new business idea. So that's actually really helpful.
Oh, cool.
Thank you for that. And also, Ollie, we probably need to have a chat beyond this, because I'd love to know a bit more about what you do. But anyway, that aside, I think often one of the big mistakes that I see people doing, especially at the startup stage, similarly, actually, it's approaching the wrong places, and also just not really following the guidance. Just as an example, I know, slight tangent, but on a daily basis, because I'm a blogger and a lot of my business is driven through kind of content marketing, I get pitches for people wanting to guest post on my blog. And so I've got just some really simple submission guidelines. And the one thing that just really frustrates me, and it's a similar, from my experience of working in HR and then my experience of working with people trying to help them find work, is just not following the guidance, just not following the simple instructions, just thinking, even though they're asking for an application form, you send them a CV. If you're saying my audience is this is the type of content that I'm looking for, and they send you something completely different. That for me is the real bugbear. So I think straight away it's actually attention to detail. If you can't get the basics right at the very beginning, then why should somebody trust you with their money? It's like, well, clearly you're not listening, you're not really engaging properly, you're not actually taking this process seriously, so you're just going to get discounted. So I think one of the first things is very much just about actually following the guidance, following the basic instructions, and not trying to think, I can get away with not doing it like that. Doesn't work. And the other thing, and this is kind of my thing really as a writer and a creative as much as anything, it's just kind of focusing on the really dry, jargony, boring business things, what you're doing, but actually not sharing any of the real passion about what you do, not kind of helping people to get to understand, not kind of winning people's hearts and minds. You're not going to win hearts and minds with lots of boring spreadsheets. The spreadsheets have their place, but they need to be put within a context of the business. So I think that's another big one, actually, is just trying to kind of be this, formal corporate type, thinking that that's what actually people want. But actually, if you want to win hearts and minds and open people's wallets, literally get them to buy into what you do, then you really need to share your passion for it, why you want to do it, why it's important, what difference it's going to make, what benefit it's going to have, rather than just focusing on the bottom line stuff.
Fabulous. That was really great. And Ollie, do you want to jump in with your stuff?
Yeah, definitely. I think I'll start with the positives first of all. I think personally, I love working with entrepreneurs and startups because they're so passionate, they've got so much energy, they're so driven, they're very ambitious, and I love working with ambitious people like that. So I'd say that, yeah, definitely don't lose the passion for what you're doing. I think that's really important. I think some of the mistakes that I see early on are in a number of different areas. I think the first one I see quite often is not really doing any kind of valid customer research. So actually just coming up with an idea and then just try and take it out there to market without speaking to anybody. So when I'm working with founders, I get them to go out and actually survey all of their potential customers and get them to do 100 of their problems. So I know it sounds quite a lot, but and then what they do is once they got those 100 problems of each customer, they actually go back through and find 3 or 4 areas that are common themes throughout that. So they're really drilling down into the day-to-day life of the problem and the solution that they're trying to solve. And also I advise them not to actually talk about their business. Just go and speak to them about what their problems are. I think that's a really good way to do it, and then ensures that you're not giving any unconscious bias in the process as well. So I think that's really important. Another area I see quite often is founders getting obsessed with the latest shiny objects. So whether it's a new CRM system or a chatbot or whatever it is, like really just focus on the basics of your business, of actually getting out there, making a compelling proposition, getting those early customers on board, rather than going for chasing all those shiny objects. That comes later once you've got a bit of traction and you're looking to scale the business. So I'd say stay focused on your customer and bringing in business in the first instance. I'd say as well, be really clear on who your ideal customer is. I think a lot of people are trying to sell everything to everyone, and we all know how that ends, obviously not well in terms of not selling at all. So I think really be clear on your value proposition and your ideal customer base. And then lastly, I'd probably say it's just the lack of accountability. So a lot of founders may not come from entrepreneurial families, or they haven't got entrepreneurs in their network. So that they don't really find themselves accountable. So I'd say go out there, speak to other founders. We run a peer learning community, for example, where you can connect with other founders. And I think that's really important, just to really understand what people are doing in different industries, but also just to get problems off your chest, and other people are experiencing similar problems as well. So yeah, I'd say that's probably the lack of accountability and lack of network in the first instance as well.
Fantastic. So I've got another question here. What do you think is going to happen to things like government grants and their availability to small businesses in light of both COVID and towards the end of the year as well, Brexit, when we finally leave the EU at the end of the year? What sort of things do you think is going to happen to the sort of funds available to small businesses?
I'm happy to jump in with this one. The West of England Growth Hub has got a grant open at the moment. So I would direct everyone's attention to there. If you're not in the West of England LEP area, look on the LEP network and find out what your local enterprise partnership is. And it would tell you, and then you can register with your local Growth Hub about what grants are currently available. But there's, between 1 and 3K available now. There's also an Innovate UK Sustainable Innovation Fund Round 3 open at the moment. So I'd advise going and checking that out. I'm happy to share links afterwards. Going back to the question about the sort of Brexit and the EU, it's a hard one, isn't it? I think, the EU gives a lot in terms of ERDF funding, ESF funding to business support. I think the government will still plough that money into business support, but it's not been quite clear yet exactly what format that's going to take.
Excellent. Amy or Paul, anything you want to say on this? Yeah, Amy.
I'll say something about that. Do you know what? I get really feisty about this whole thing. I have to warn you now that I've got a real kind of a bit of a bugbear about the fact that I actually don't think that that policymakers at the government particularly take one-man bands and solo businesses seriously, that they don't really pay us any attention. You have to be a little bit savvy and kind of look at what's out there. West of England Growth Hub, Growth Places to Start. In fact, the reason I got invited onto this panel is because I did a blog last week with a roundup of everything I could find that, you know, potentially micro businesses could access. So I'd love to see the links that you mentioned as well, Ollie, because I'll add those to my blog, because I wanted to create a resource that people could look for. But I think that very often business support talks very much about SMEs. And as you alluded to earlier, actually the reality of the day-to-day issues that, you know, one-man bands, very small businesses experience is very different to what a SME might experience. And I don't think that they take us very seriously, if I'm honest. So this is my kind of opinion as much as anything. And there's very little, as far as I can see, in terms of actual hard currency for people without borrowing money or fitting certain criteria. And the level of kind of free or funded business support in the West of England just seems to be diminishing regularly. And I think that's going to be a real challenge going forward, because a lot of the support is very much about, you know, and I get it, I understand why policymakers are wanting to hit bigger businesses, because they're going to get a better return on investment in terms of numbers of jobs created. But I think that shouldn't be at the expense of empowering individuals to go and create work, because at the end of the day, the one-man bands of today are going to be the employers of the future. And I think it's short-sighted to not take notice of those people and not give them that support at the very early days. There's so much evidence that we all know that many businesses don't succeed beyond the first 2 years, but businesses that ask for help, that get support, that make networks, that build connections, that don't try and do it all on their own, that ask for help, are much more likely to survive and thrive into the future. So I think there's a real gap actually for some real tangible government and whoever support for very small micro businesses. I think there's quite a lot for larger businesses, but not very much for the small businesses. That said, I personally referred quite a few people into the startup loan scheme. I think that's been really handy for people to just be able to, you know, need quick cash to get something done. It's often not even a lot. It's often only, you know, 2 or 3 grand just to kind of get their website started, get some materials so they can go for it. But yeah, I think it's definitely going to be a challenge. And any support that is out there, I think, should be welcomed. And I think actually, as small business owners, as founders, as kind of entrepreneurs, it's kind of part of our responsibility really to get out there and go and find it and get involved and ask the questions. Like I joined the Export for Growth program with Business West last year, I think it was. And it was because I'd spoken to one of the advisors at a business show, and in my mind I didn't think that I would be able to get it as an individual, because I always had this perception that Business West only worked with large businesses. So I was pleasantly surprised to find that I could go along to workshops as an individual and get support. So I think don't ask, you don't get.
Excellent. I know that I've seen quite a lot about the excluded. The MP Jamie Stone is pushing that, which is dealing with freelancers and self-employed people who are sort of one-man bands that just seem to be completely excluded from all government help and schemes and stuff like that. So I know that's a campaign going on in Parliament at the moment for, you know, the government to actually support small one-man bands who have been excluded from previous stuff. So that's so if it's something passionate about, something worth maybe having a look into. But Paul, is there anything you want to say on this?
Yeah, I mean, I think things are shifting a lot already in terms of the kind of fallout from the COVID and also Brexit. That's been on the cards for quite a while. So I'll mainly stick to investment side of things. But I just also want to flag up that I'm a member of the Partner British Library, and they do a a growth scheme, innovation for growth scheme, where it is free to join, to apply. And also, by the way, just I'm sure you'll share it, but I've done a resources page as well, which covers a fair amount of stuff that I haven't talked about or I'm going to talk about, and including the Innovation for Growth programs, free to join, and it's a great, you know, program. A number of my clients have been on it. So anyway, that's that. Yeah, I mean, it's true. The main support is outside of that is loans, and there's the C-bill loans, which does actually close this month. So if anyone's interested in that, and also I know the bounce back loan, which closes in November, and that is just an amazing scheme. But obviously means it's for companies that are trading. And then startup loan is brilliant as well. And like I would say half of my clients have actually started a startup loan at some point. Now, in terms of investment though, the landscape is changing in that it used to be the case. You do like lots of big rounds, like we need another 150K, and then we need 500K, and then we need 1 million. And then it typically rolls around every 12 months. So you're constantly kind of gearing yourself up, steeling yourself for the next round. And it's thank God I've got it. And then, and I had to pay a heavy price to get it maybe. And then 6 months in, you already think about next round. Thankfully, thanks to COVID, it's accelerated that in terms of change, and even perhaps Brexit as well, because investors are a little bit more wary of actually investing large amounts of money. So that has switched things up, and there's a term out there that's starting to evolve, and that's called agile funding. So that means that you're not looking for bigger rounds nowadays. You'd be better off actually looking for smaller, frequent rounds. So you're building up an investment kind of database or investment club. That's probably the biggest and best thing you can do. So you might start with 150K round, but on those investors you do get, who knows? And if you do crowdfunding round, you might have 300, 400 investors that are part of that round. And by the way, it's not as difficult as it sounds. To do one campaign it happens naturally. You don't go out speaking to each one, obviously, or they all sit at a board table together with you. No, that doesn't happen. It's actually much more easy than that. Or it's just that you've got a dozen investors. But you would have people that you would stay with you for the journey. So let's just say 6 months later, you give them all an update and say, we're opening for a mini round of another 50,000 or 20,000, where it's going to be. And it'd be great if we just top up because we've got these plans. So you basically, and there's a organization called Seed Legals making that a little bit easier to access this and streamline the whole process in terms of legal form. So it's becoming much more available, which is, for some entrepreneurs, seems a bad thing, but I think it's a good opportunity, because then it's everything's about much more in control of the entrepreneur to actually build the relationships, do the research, and build for the long term, and not constantly firefighting all the time. So that, I'd say that's my major thing. You kind of have to own the relationship with the investor and really spend time cultivating those relationships. Even if you're not ready right now, I'd say one of the best ways, if you're not ready right now, it's the best time, because at that point you're just evolving the idea, and you can honestly go to investors, say, look, we're not looking for investment right now, but it'd be great to touch base with you. Are you interested in keeping in touch with what I'm doing? I've got great plans, and I probably need a little bit of advice. It'd be really helpful if you could give me some guidance on this particular thing. And then when they're given the advice, then you can say, look, I followed up with this action, what do you think? And then that way you're building up a relationship. You're not even asking for capital at that point. And then when you're looking for investment, hey, we're looking for a small round at the moment. Are you able to be included in that round, or do you know someone that could be included in that round? And then you own that relationship, build and stay with them, and they'll stay with you for the journey of that business. So I would say that's the biggest shift. And generally, although there are, not to say there's not going to be struggles, because there is, you just have to be sharper. You have to be closer to the customer and really get a sense, really ask questions. Just like, you said, Amy, and same with Ollie, you just ask lots of questions, really be like a sniper gun approach with what your customers want and what your investors want. If you look after both of those, then you could ride out this storm and actually be better off for it.
Oh, could I just add a comment to that? Because that's, it sounds really interesting what's kind of the changes that are taking place. Because when I was based up at Future Space, I used to see lots of founders literally taking 6-9 months out of their business to go on these big funding raises, the likes of like Open Bionics and big businesses there, looking for big funding. And I think it's a real distraction from actually running the day-to-day business. And I think if they're looking for these more agile kind of mini rounds, hopefully that's going to enable them to not take one eye off the business at the same time.
Exactly, yeah. That's the whole point. It is really tiring. I've had some people that obviously, well, I will work for them for 6 months sometimes to get a campaign done, or a whole funding round. And if it's a crowdfunding, it's kind of probably about 3 months. By the end of it, they're absolutely thrilled to just get back to the business. Even, it's a successful round. It's been great because they've picked up loads of opportunities, but they just want to get on with the business, and they don't want to be doing this every, sometimes it's more often than that. Sometimes it's every 6 months. So you're almost constantly looking to start and even starting a big round or finishing a big round. So that's the beauty of this particular approach. And I'm trying to guide everyone I'm speaking to along these routes for the future anyway.
Fabulous. I'm just going to say, you guys have all mentioned various programs and funding and things like that. And if you could just send us the links, if you've got them to hand, when you're done, so that when we sort of share this video and talk about it, and I'm sort of planning to put together a blog to go with the video, and actually it'd be really great to include all these links and resources and everything. So that would be fantastic. Yeah, just having another look. One that I think, Paul, you sort of touched on earlier, but I'd like to hear Amy and Ollie, things like crowdfunding. What are your experiences of that, and how successful is it, really?
Yeah, good question. I've helped a few customers with a crowdfunding campaign. I think the first thing to say about crowdfunding is that you kind of need the crowd ready-made to go to. So I think you need a big email list, subscription list that you can actually tap into. So I'd say before you even consider it, think about building that up before you even start thinking about a crowdfunding campaign. As Paul was saying, it can take 3 months out of the business, 1 month prior, 1 month during, 1 month after, fulfilling all of the crowdfunding delivery if you're doing a rewards-based campaign. But I think the upshot of crowdfunding is great in the sense that it helps with pre-sales. So in terms of cash flow, it's money into the business before you've had that money having to go out of the business. So that's great. It also is really good in terms of PR and publicity. So it can be right for certain businesses. Obviously, if you've got a product-based business and you want to do a rewards-based campaign, that can be quite a good way to go. Obviously, if you're looking at an equity campaign, there's several platforms like Seeders, Crowdcube, etc. that you can look at. So I think it really depends on the stage of your business and where you're at the moment before you should start looking at it.
I can say something about crowdfunding as well, because I've successfully completed 2 crowdfund campaigns for literary projects, actually. So I did a crowdfund, both with Fundsurfer, actually, who are a Bristol-based outfit. And my second novel, Solomon's Secrets, was one of their first projects. So I kind of got on board with Ollie and Derek at the beginning with that project. So I kind of was able to kind of capitalise and springboard off their kind of publicity push as well, which definitely helped. So I raised, I think it was 1,500 quid for that one. So I'm not talking like, masses, but that was plenty for me to pay for some professional support to project manage the whole process of publishing the novel and getting some editorial support, cover designs, all that kind of stuff. And absolutely the marketing benefit of that was amazing. It gave me such a boost, and at one point that book became, when it was released, it became a bestseller on Amazon for a few months, which was pretty cool. And so yeah, but you're right, it did take, effectively it was exhausting. It was a 3-month process, really, because it was like preparing for the campaign and then a month of really intensive marketing where I basically didn't really do anything else. I didn't even, all my other projects kind of ended up going on hold, and then the month after, actually fulfilling it all, because effectively what I was doing was pre-selling the book. And there were different kind of stages. I think the other thing to remember if you are going to put together a campaign is there's loads of advice on there, but what I found was actually you need to have a really good cross-section of rewards. I think a lot of people think that crowdfunds are just free money, that you're just like begging for money and you don't give anything back, and that's not true. I mean, there's equity crowdfunding, but in terms of the reward base, which is the ones that I did, it was very much kind of, you've got different levels. So I started off where it was kind of like 3 quid for an ebook kind of thing, and 10 quid for a paperback that was signed, and then I had various other kind of scales right the way up to like a full VIP package for the launch with copies of all the books and your name in the book and all sorts of stuff. And what you find is that people tend to go for the middle. So I thought I need to have a really cheap one, like 3 quid ebooks. I get loads, and hardly anyone got that, but loads of people went for the sort of £25, £30 option was the real sweet spot. And actually just getting loads of those, sort of 20, 30 of those was the majority of the campaign done and dusted. And I also managed to campaign for Bristol Festival of Literature. I've been quite involved with it over the years. A couple of years ago, we did a crowdfund, so effectively we were pre-selling tickets to events, packages of tickets, goodie bags and all sorts of stuff as well. And again, it was the goodie bags that ended up being the most popular of those. So I think, yeah, I mean, I found it a really valuable process. And I think for me, probably, because in a funny sort of way, the money didn't really matter that much with the book. I could have done it without, you know, I could have scrabbled around and done it. But actually it was that publicity boost for me, which was the biggest kind of game changer, I think, when I did a crowdfund for that one.
Excellent. Paul, anything you'd like to add on that?
Yeah, well, I'm not going to cover reward then, because Amy covered that actually really well. I've done a couple of reward ones, but I might tend to focus on the equity ones. Done quite a lot of those because it forms a fair part of what I've been doing over the last few years. So I find just trying to give the biggest, well, basically what you need really to line up the stages of the business. You know, you don't always have to be a later stage company. I mean, one of the most successful campaigns that I've had on it have been 2 guys that didn't even have a website, raised about £300,000 or so. And now they've gone on to raise millions, but at the time they're still working their day jobs, and yeah, I didn't even have a website, just an idea and a contract with an insurance company for quite a tricky aspect. That was out there, just that was their only edge, basically. But the idea itself really sold with the crowd, because it's the sort of idea that the crowd really would bought into, and something they'd like. And I'll tell you what it is, so you can even look it up. It's called Hire Car. And Hire Car is basically, so you want to basically rent your car off your drive when you're not using it. That maybe you've got something like a BMW, you've paid a lot of money for it, you're not able to capitalize it, you don't go out any much, so you can rent it out by the day. It was never done in the past because no one could find a way through the insurance maze, but they just managed to do that. But because they sold the idea really well and people loved that idea, they raised, it was one of the fastest campaigns. I think we even closed early on that one. So but that was obviously really early stage. And with that, they actually managed to build the platform, or part of the platform anyway. Even then they needed another round after that to finish the platform. And yeah, since they're doing really well. That's that. So the stages are kind of, it's easier if you're later stage because you've got more customers. You can use the customers for investors. So it is much easier in that terms. If you haven't got customers, then you can use investors. So you can go for professional investors or amateur investors or family and friends. But as long as you've got to at least 40% of the amount that you need to raise, and the average, I would say that the average ranges that I've been doing is a starting point of 100,000. But then the average overfund, we're looking at about 150% overfund at least. So you can go well over the target, but you're looking for 40% of that low target. I would say if you only remember one thing from about equity crowdfunding, and same with reward crowdfunding, is to get that initial community bank, that initial money. As you were saying, Ollie, you have to kind of get that into place. Whether it doesn't almost matter where it comes from. Sometimes it helps if it's from a lead investor, someone that actually knows a lot about the sector. Then you can have them in the video, the kind of 3-minute video that you've got on the site. That adds even more credibility. So the other main thing is the social proof psychology of it is really important. So at least 40%, I would say nowadays probably 50% to be honest, of a low target, the target that you can get away with and make some traction with, and then go in at that. And then by even just that thing alone, with a good proposition, a good pitch, an emotive pitch that doesn't just sell the mechanics of it, but sells the end result and puts people in the story. Then those are my best tips in about 3 minutes. Yeah, it's a great topic, and I'm a big fan of it because I've seen so many people benefit from it from all sides.
Fabulous. Thank you so much. So I don't think we've got any more questions unless anyone wants to ask any last minute questions. Speak now or forever hold your peace. I don't know if any of the panelists have got anything that they've, final comments or anything that they feel they haven't talked about already. Yeah, now's the time.
I'd just like to add, because you said we're going to send you some information. So I've got like a page, a special page for your community that they can go to, and they can download some important kind of information, that some of which I've been talking about, but also on the Innovation for Growth program I mentioned. Also, there's a webinar that I do regularly probably 5 weeks with an angel investor. It's just a Q&A like this. So so people can ask them, or come on board on that one and ask any questions that you've got to this angel investor, and he really tells the brutal truth on everything. Some people think too much on the brutal truth side, but he's really, really candid, and he's very, you'll get a much clearer sense of what angel investors are looking for by the end of it. So it's on that side. Yeah, so that's it really on my side. Just to point everyone in a direction, because it's a lot of information to distill, let's face it. So yeah, just keep attending webinars like this, I guess, and build your knowledge.
Yes, thank you very much. Right, if no one else has got anything to finish, thank you very much, guys. Sorry, Tom's just appearing in the background. Yeah, it's been a really great session with you guys, and thank you so much for joining us this lunchtime. And I hope everyone's got something out of it. And this will be going up on our website and shared around our social media, and we'll sort of tag all you guys as well, so that if anyone watching wants to kind of connect or hear more from you guys, it will all be in there. But thank you so much for your time, and yeah, have a fantastic day, everybody. Thank you very much.
Great. Thanks so much for having me.
Thank you, guys.
Thank you.
Bye.
Thank you.